U.S. seniors 60 plus, check this one record. Claim your larger Social Security check. It was a regular Wednesday, and a 68-year-old man in Ohio sat at his kitchen table looking at the same Social Security deposit he had been receiving for 3 years. Same number. No reason to question it until his son showed him something, a 5-minute check of his earnings record online, and found 4 years where the numbers were completely wrong. They filed one correction form, no attorney, no fee, and 2 months later his monthly deposit went up by over $280 every month permanently. He had never been told that record existed. Nobody told him to check it, and that is exactly what this video is about. There is one record the Social Security Administration will never ask you to verify, one error they will never flag, and one form that corrects it. And if you are 60 or older, filing it can legally increase your monthly deposit for the rest of your benefit life. Not a bonus, not a one-time payment, permanent. And they will never tell you to do it. My name is Lana Maines. I am here to represent taxpayers directly in front of the Internal Revenue Service. I cover the financial rules, forms, and deadlines that affect seniors every single year, the ones the government is not required to explain to you and usually does not. This channel exists so you have that information before it costs you. If you want more videos like this one, beneficial financial information that can directly improve your monthly income and your quality of life, subscribe to this channel and turn on notifications. I put out new content every week, and every video covers something specific you can actually act on. Your Social Security benefit is not calculated from a single number. It is built from your entire earnings history, every year you ever worked, going all the way back to your very first job. The Social Security Administration takes your 35 highest earning years, adjusts each one for inflation, averages them together, and runs that average through a formula to produce your monthly payment. Every single dollar in your check traces back to that earnings record, which means if even 1 year on that record is wrong, showing half of what you actually earned or showing 0 when you were working full-time, your entire average is pulled down. Depending on your earnings level and which years are affected, a single year of missing or inaccurate earnings can reduce your monthly benefit by anywhere from $50 to over $100. That is potentially $1,200 or more a year. Over a 20-year retirement, one wrong year can quietly cost you tens of thousands of dollars. If 2 or 3 years are off, multiply that out and the SSA will never tell you. There is no alert, no letter, no red flag. The error sits there, silently reducing every check you receive until you personally open that statement and look. Here is exactly who is most likely to have money sitting uncollected on their earnings record. Right now, there are 4 specific groups, and if you recognize yourself in any of them, checking your record is not something to put off until next month. It needs to happen this week. I am going to walk through all 4 because the people running these errors do not all look the same, and I want anyone watching to be able to say with certainty whether this applies to them or not. The first group is anyone who worked for a small business during the 1970s, 1980s, or 1990s. During that era, payroll for small operations was frequently handled by hand. A paper ledger, a basic bookkeeping system, sometimes just handwritten records. Honest mistakes in reporting wages to the SSA were far more common than they are today. And those mistakes rarely got caught because nobody was checking. If you spent years working for a small shop, a neighborhood company, a family-run operation, or any employer where payroll was not processed by a dedicated HR or accounting department, your record is exactly the type that tends to contain errors. Take a man named Daniel. He spent 4 years in the early 1990s working for a small landscaping company. Solid work, steady pay. When he finally pulled his Social Security statement at the suggestion of a family member, he found that those 4 years showed earnings at roughly 55% of what he had actually been paid. The owner had processed payroll manually and submitted incorrect figures every year. Daniel filed a correction with his old tax returns as supporting documentation, and his monthly benefit increased by over $280. Money that had been sitting miscalculated for nearly 30 years recovered with one form. The second group is anyone who was ever self-employed, ran their own business, worked as an independent contractor, or did any freelance work. Self-employment earnings are reported through Schedule SE attached to your annual Form 1040. That reporting process has more points of failure than standard W-2 employment. A year where self-employment income was not properly submitted to the SSA or was recorded at an incorrect amount can produce a zero or a low figure on your earnings record that silently reduces your benefit calculation for the rest of your life. If you worked for yourself at any point, even for just a few years, examine those specific years with extra attention when you open your statement. The third group is anyone who changed employers frequently throughout their career. Every time you started working for a new company, that was another opportunity for a payroll department to enter your Social Security number incorrectly, to mistype a digit in your name, or to attach your wages to the wrong record entirely. In those cases, the earnings were reported. They just were not reported under you. The more employers you had across your working life, the more opportunities existed for at least one of those transitions to produce an error. Transition years, the year you left one employer and started another, are where errors concentrate most heavily. Check those years specifically when you open your statement and compare the employer in your memory against the earnings figure showing for that period. A full-time year that shows unusually low earnings is worth investigating. The fourth group is the most overlooked and most financially damaging of all four. Anyone who changed their name at any point during their working life and did not immediately update that change with the Social Security Administration. If the name your employer submitted does not match the name on your Social Security record, those earnings can fail to attach to your file at all. They sit inside the system credited to nobody. Real work, real paychecks, simply not counted. This happens most commonly with women who change their name after marriage or divorce. If you are a woman who changed your name at any point during your career, and have never specifically verified that the earnings from your prior name are correctly attached to your current record, go look at the years surrounding that name change right now. Now, here is something I need to tell you clearly because the timing matters specifically right now in 2026. The law gives you 3 years, 3 months, and 15 days from the end of a taxable year to correct earnings for that year under the standard window. The legal reference is 20 CFR section 404.802. For 2022 wages, that standard deadline was April 15, 2026, which has already passed. If you have a 2022 discrepancy, the standard window is closed, but exceptions still exist. If your employer submitted a late report, the window stays open. If the SSA made a clerical error in recording your wages, the window stays open. And if you filed your 2022 federal tax return on time and it shows earnings that differ from what the SSA has on record, that filed return can qualify as an exception, but you will need to make that case directly with your local SSA office, and waiting longer only makes it harder. For 2023 wages, the standard correction deadline does not close until April 2027. That is the window that is open right now and the one you should act on immediately. Check 2023 first when you open your statement. Then work backwards through any other years that look wrong. So here's what I want you to do. The exemptions, the breaks, the refunds, most seniors already qualify for but never claim. I have put them all in one place, state by state, form by form, so you do not waste hours digging through government sites. Everything is laid out fast and simple so any senior can find exactly what applies to them. No matter what state you are in, there is money you are leaving on the table. It is called the Senior Exemption Playbook. It is in the first pinned comment right below this video. Just tap it once and you will have everything you need. Now stay right here because the last section covers the one mistake that causes most correction requests to fail before they ever reach a reviewer. And it is the reason I made this whole video. The form you need is called Form SSA 7008, the Request for Correction of Earnings Record. Write that down, SSA 7008. It is completely free. You can download